Hello, everyone, and welcome back to our series on sustainable project management. I'm Brian.
And I'm Mark. In this episode, we'll be exploring how to measure and report on sustainability in projects, including some important frameworks like CSRD, ESRS, and ESG.
That's right. Let's start with why measurement is so critical. It's one thing to set sustainability goals, but if we don't have the right tools and frameworks to measure and report on them, it's hard to know if we're making an impact.
Exactly. And one of the key frameworks that organizations, especially in the EU, need to be aware of is the CSRD, the Corporate Sustainability Reporting Directive.
The CSRD is an update to the EU's non-financial reporting directive. It requires companies to report more detailed information about their environmental and social impact. And it's not just for large companies anymore. Many medium-sized companies are also included.
Yes. And the CSRD is designed to ensure that sustainability reporting is as rigorous as financial reporting. It introduces the ESRS, the European Sustainability Reporting Standards, which provide a consistent and standardized way for companies to report on various sustainability metrics.
And these standards focus on a range of topics like environmental impact, social responsibility, and governance practices. For project managers, aligning our projects with these standards means we need to integrate sustainability considerations right from the planning phase through to execution and delivery.
And speaking of aligning with standards, ESG, or the environmental, social, and governance criteria, is another key framework we use. ESG helps us evaluate the sustainability and ethical impacts of our projects.
That's right. Under the ESG framework, environmental measures look at aspects like carbon footprint, waste management, and energy use. The social criteria cover human rights, diversity, and labor practices, while governance focuses on things like compliance, transparency, and ethics.
So, in a project context, using ESG criteria means incorporating these factors into every stage of the project. For example, during the planning phase, we might assess the carbon emissions of different materials and choose the most sustainable option.
And it's not just about measurement, it's also about how we report this data. The CSRD and ESG frameworks encourage us to provide transparency through regular updates and reports that stakeholders can trust.
Now, we understand that getting started with sustainability reporting can seem daunting, especially at the project level. Often the challenge is that a project can't get started without the organization having a clear sustainability framework in place. That's why we recommend beginning with your organization's sustainability report.
Exactly. Well, let's take an example. Say you're working in a company that has published a sustainability report using this CSRD or ESG frameworks. The report might set out targets like reducing carbon emissions by 20% over the next 5 years or improving diversity in the workplace.
As project managers, our role is then to translate these high-level goals into specific actionable metrics within our projects. For instance, if your company's sustainability goal is to reduce emissions, you could focus on sourcing low-carbon materials or minimizing transportation during the project.
And once we have those project specific goals aligned with the organizational framework, we can start integrating them into our project planning and tracking. Tools like sustainability scorecards or KPIs can help project managers keep track in progress in real time and report on it effectively.
To bridge the gap between corporate and project level reporting, it's important to ask, what impact will my project have on the company's sustainability objectives? And how can we report on that impact in a meaningful way? This ensures that your project contributes to the larger sustainability picture.
And let's not forget about the importance of storytelling. When we report on these metrics, it's not just about the numbers, it's about the narrative behind them. We need to show our stakeholders the impact that we're making and the steps we're taking to create a more sustainable project outcome.
Absolutely. And with regulations like CSRD, the stakes are higher than ever. It's not just about compliance, it's about demonstrating a commitment to sustainability that goes beyond the minimum requirements.
Exactly. Integrating CSRD, ESRS, and ESG into our projects allows us to align with best practices, comply with regulations, and ultimately build trust with our stakeholders. It's all about being proactive, transparent, and accountable.
Now, let's talk about the differences between the EU and the USA when it comes to sustainability reporting. In the EU, frameworks like CSRD and ESRS are becoming mandatory for a wide range of companies. This means that organizations are required to follow specific guidelines and report regularly on their sustainability performance.
Here in the US, however, there isn't yet a unified mandatory reporting standard for sustainability like the CSRD. The focus is more on voluntary frameworks such as the Global Reporting Initiative or the Sustainability Accounting Standards Board, or SASB. Companies often choose which framework to follow, leading to some inconsistencies on how sustainability is reported.
And that's a crucial difference. In the EU, there's a stronger emphasis on standardization and compliance, which helps create more consistency and comparability across companies. This can be an advantage for project managers as they have a clearer guidelines on how and the expectations to align with.
On the other hand, the flexibility in the US allows companies to tailor their sustainability reporting to fit their specific industry or corporate strategy. However, this can also make it challenging for stakeholders to compare and assess sustainability performance across different organizations.
For project managers working in international context, understanding these differences is essential. We need to adapt our reporting practices to fit the regulatory environment of the region in which we are operating.
Absolutely. The key takeaway is that whether you're following the structured mandatory approach of the EU or the more flexible voluntary one here in the US, integrating sustainability into our projects and reporting transparently remains a priority.
Well said. And with that, we've come to the end of our Sustainability Project Management webinar series. We hope you found these sessions valuable and you feel equipped to integrate sustainability into your projects effectively.
It's been great to share these insights with you. But remember, sustainability isn't just a checkbox. It's a commitment to making meaningful impacts through our work.
Thank you for joining us throughout the series. We look forward to seeing more sustainable projects you'll lead in the future. Until next time, keep building better, more sustainable projects.
Take care and good luck on your sustainability journey.